Now, let's dive into the overview of the audit of public sector undertakings, or PSUs. To make this concept easy to grasp, the material gives us a great practical scenario featuring C.A. Smita, who joined the Indian Audit and Accounts Service. Her journey perfectly illustrates the three different types of audits the Comptroller and Auditor General, or C&AG, carries out in the public sector.
First, let's look at compliance audit. In the example, Smita was auditing an insurance PSU. She wasn't just looking at the numbers, she was checking if the company followed regulatory norms. She discovered that the company issued policies to mobile handset dealers without conducting actuarial valuations or getting the necessary approvals. Because they ignore these rules, essentially failing in compliance, the company suffered losses during claim settlements. So remember, a compliance audit is all about checking if the entity is following the laws, rules, and regulations.
Next, we have the performance audit. Smita was part of a team auditing a government-owned steel company that was expanding its plants. Here, the focus shifted from rules to results. The team looked at project planning, tender finalization, and execution. They found that projects were delayed, and because of these delays, the company missed out on a booming domestic steel market. This is the essence of a performance audit. It evaluates economy, efficiency, and effectiveness. It asks, did the entity achieve its goals in the most optimal way?
Finally, we see the role of supplementary audit. Later in her career, Smita worked on reports regarding the financial performance of state-owned corporations. She dealt with a specific comment from a supplementary audit conducted by the C&AG regarding a power generation company. In this case, the C&AG found that depreciation was calculated incorrectly, which led to profits being overstated by 20 crore rupees. A supplementary audit is essentially an additional layer of scrutiny by the C&AG on the financial statements, even after they have been audited by the statutory auditors. Through C.A. Smita's experiences, we can see the encompassing reach of the C&AG, ensuring that public money is spent wisely, rules are followed, and financial reporting is accurate.
Essentially, a public sector undertaking is any entity that is owned or controlled by the central government, a state government, or a combination of both. These enterprises aren't just businesses. They are the backbone of India's socio-economic development. Think of them as the providers of the most basic, critical inputs that keep the rest of the economy running. We're talking about heavy industries like coal, oil, steel, minerals, cement, chemicals, and fertilizers. Beyond industrial production, we also have public utilities. These are the essential services we use every day, such as the railways, postal and telecom services, and electricity generation and supply.
Now, while the public sector used to be the absolute dominant force in our national economy, the landscape has evolved. Today, the private sector is also actively involved in many of these areas, such as telecom and power generation, creating a more competitive environment.
The ICAI categorizes them into three distinct types. First, we have departmentally managed undertakings. These are essentially part and parcel of the government's own administrative activities. A classic example here would be the Indian Railways or the Postal Services. Second, we have government companies and deemed government companies. These are specifically set up and registered under the Companies Act, 2013. And third, we have statutory corporations. These are created under specific acts passed by the legislature. Think of the Life Insurance Corporation, or LIC, and the Unit Trust of India, or UTI, as prime examples of this category. Understanding these three categories is the foundation for everything else we will study regarding the audit of these entities, as the legal structure often dictates the auditing requirements.
In India, government auditing isn't just a routine process. It is performed by an independent constitutional authority known as the Comptroller and Auditor General of India, or the C&AG, operating through the Indian Audit and Accounts Department. To ensure the C&AG can work without any external pressure, the Constitution of India provides a special status and specific safeguards to maintain this independence.
If you look at Articles 148 to 151 of the Constitution, they clearly define the role of the C&AG. Under Article 148, we see that the C&AG is appointed by the President. To protect the office from arbitrary removal, there is a special procedure. The C&AG can only be removed on grounds of proven misbehavior or incapacity. Furthermore, their salary and service conditions are determined by Parliament, not the executive, which is a key independence measure. Moving to Article 149, this gives the C&AG the power to perform duties and to exercise authority over the accounts of the Union, the states, and any other body as prescribed by law. These specific functions are detailed in C&AG Duties, Powers and Conditions of Service Act of 1971. This act also specifies that the C&AG holds office for a term of 6 years or until the age of 65, whichever comes first, and can resign by writing to the President.
Article 150 is quite straightforward. The President prescribes the form in which the accounts of the Union and states are kept, but does so based on the advice of the C&AG. Finally, Article 151 outlines the reporting process. The C&AG submits audit reports relating to the central or state governments to the President or the Governor, who then ensures these reports are laid before the Parliament or the state legislative assemblies.
Now, you might wonder, who exactly falls under the C&AG's umbrella? The scope is vast. It includes all union and state government departments and offices. Think of the Indian Railways, posts, and telecommunications. It also covers public commercial enterprises like government, companies, and corporations, non-commercial autonomous bodies owned or controlled by the government, and any authorities that are substantially financed from union or state revenues. Essentially, if the government's money is involved, the C&AG has the oversight.
First, let's look at the audit of government companies, which we often refer to as commercial audit. This applies specifically to companies where the government holds a majority stake, that is, equity participation of 51% or more. Now, it's important to note that the actual auditing is done by firms of chartered accountants. However, these auditors aren't appointed by the company, they are appointed by the Comptroller and Auditor General, or the C&AG.
The C&AG maintains significant control here. He provides the directions on how the audit should be conducted and has the power to comment on the auditor's reports. Furthermore, the C&AG isn't limited to just reviewing the CA's work. He has the right to conduct a supplementary audit or a test audit if he feels it's necessary.
To handle the complexity of diverse economic sectors, the Indian Audit and Accounts Department uses a unique feature called audit boards. These boards are designed for comprehensive audit appraisals of public sector enterprises. What makes these boards effective is that they bring in experts from relevant disciplines to ensure the appraisal is technically sound. Before finalizing their findings, the boards discuss their conclusions with the management of the enterprise and the controlling government ministries to get their viewpoints. Once finalized, these results are incorporated into the C and AG's reports. Just remember, these audit boards are not separate legal entities. They operate entirely under the supervision and control of the C and AG.
Finally, let's talk about what happens after the audit reports are issued. Now, realistically, the Parliament or state legislatures cannot scrutinize every single detailed account and report. It would be an arduous task and take up too much time from other national priorities. To solve this, they have established specialized committees. These are the Public Accounts Committee, the Estimates Committee, and the Committee on Public Undertakings, commonly known as CAPU. All audit reports and annual accounts are automatically referred to these committees for detailed scrutiny.
Now, let's dive into the overview of the audit of public sector undertakings. When we talk about the oversight of public funds, there are three critical parliamentary committees you need to understand for your exams: the Public Accounts Committee, the Estimates Committee, and the Committee on Public Undertakings.
First, let's look at the Public Accounts Committee, or the PAC. Think of the PAC as the primary watchdog for government spending. Its main duty is to satisfy itself on three key points. First, that money was disbursed legally for the specific purpose it was intended for. Second, that the expenditure was actually authorized. And third, that any reappropriation, which is essentially how funds were redistributed, was done according to the rules. Additionally, the PAC examines the accounts of autonomous and semi-autonomous bodies, especially those audited by the Comptroller and Auditor General.
Next, we have the Estimates Committee. While the PAC looks at what has already been spent, the Estimates Committee focuses more on the planning and efficiency side. They examine the estimates to suggest economies, organizational improvements, or administrative reforms. They can suggest alternative policies and check if money is being well utilized within the set limits. Now, a very important point for your conceptual clarity: the Estimates Committee does not comment on a policy that has already been approved by Parliament. However, if they find evidence that a policy isn't delivering results or is causing waste, it is their duty to bring that to the attention of the House.
Finally, let's discuss the Committee on Public Undertakings, known as CAPU. You can think of CAPU as the equivalent of the PAC, but specifically for public sector undertakings. It exercises the same level of financial control over PSUs that the PAC exercises over government departments. Its functions include examining the reports and accounts of these undertakings, as well as reviewing the C and AG's reports on them. Crucially, CAPU looks at the autonomy and efficiency of these PSUs to ensure they are being managed using sound business principles and prudent commercial practices. They also handle any other functions assigned to them by the Speaker that might overlap with the PAC or the Estimates Committee.
When these committees look at a public undertaking, they aren't just checking boxes. They are performing a comprehensive appraisal or evaluation of performance. This means they conduct a thorough examination that covers everything from the policies and programs to the actual financial workings of the entity. The most important thing to remember here is the objective. The committees aren't just looking for a single mistake or an individual irregularity. Instead, they want to find the root cause. They look for the defects in the system that allow that irregularity to happen in the first place, so they can recommend corrections to the systems and procedures. To put this into perspective, look at the case of BNPC Limited, a PSU in the power sector. If a financial committee of Parliament decides to examine its physical and financial performance, and looks at the C and AG's audit findings to see why action hasn't been taken, they are exercising exactly the kind of systemic oversight we just discussed.
When these committees look at a public undertaking, they are just checking boxes. They are performing a comprehensive appraisal or evaluation of performance. This means they conduct a thorough examination that covers everything from the policies and programs to the actual financial workings of the entity.
The most important thing to remember here is the objective. The committees aren't just looking for a single mistake or an individual irregularity. Instead, they want to find the root cause. They look for the defects in the system that allow that irregularity to happen in the first place, so they can recommend corrections to the systems and procedures.
Now, let's talk about the C and AG. The Comptroller and Auditor General of India is absolutely central to this process. In fact, the C and AG is often described as the friend, philosopher, and guide of these committees. The C and AG's reports generally serve as the foundation for the committee's work. However, the committees are flexible. They can still examine issues even if they weren't specifically highlighted in the C and AG's reports.
Second, the C and AG acts as a technical expert. When ministries submit notes to the committees, the C and AG scrutinizes them. This helps the committees verify that the facts, figures, and submissions provided by the government are actually correct.
Moving forward in the process, the financial committees present their final reports, including observations and recommendations, to the Parliament or state legislature. The government departments are then required to report back on the actions they've taken based on these recommendations. These are then presented as action taken reports. Finally, there's a very practical mechanism for reports that the committees don't have time to discuss in detail. In those cases, written answers are obtained from the concerned ministry and incorporated into the reports. This is a brilliant safeguard because it ensures that the government cannot simply ignore the audit reports just because they weren't debated in a session.
To put this into perspective, look at the case of BNPC Limited, a PSU in the power sector. If a financial committee of Parliament decides to examine its physical and financial performance, and looks at the C and AG's audit findings to see why action hasn't been taken, they are exercising exactly the kind of systemic oversight we just discussed.
Now, let's dive into the overview of the audit of public sector undertakings, or PSUs. This is a crucial area for your CA final exams, so let's break it down clearly.
First, it's important to understand the legal framework. The C and AG's duties, Powers and Conditions of Services Act of 1971 is the guiding light here. This act specifies exactly which entities at both the union and state levels fall under the audit purview of the Comptroller and Auditor General. However, a key point to remember is that while the act defines who is audited, the actual scope and extent of that audit are determined by the C and AG himself. Now, when we talk about the audit of PSUs, you must realize that it is far more expansive than a standard corporate audit.
First, we have the shift beyond just financial and compliance audits. In the private sector, we focus heavily on whether the financial statements are true and fair and if laws were followed. But for PSUs, the audit extends to performance audit. This means the C&AG looks at the 3 E's: efficiency, economy, and effectiveness. The goal is to see how well the PSU is operating to fulfill its specific objectives and goals.
Second, we have the propriety audit. This is a very interesting concept. A propriety audit doesn't just ask, is this legal? But rather, is this right? It examines management decisions regarding sales, purchases, and contracts to ensure they were taken in the best interests of the undertaking and align with accepted principles of financial propriety. Essentially, it's about ensuring that public money is spent with the same wisdom and care as a person would spend their own money.
Finally, we have the comprehensive audit. Think of this as a high-level appraisal. The C&AG doesn't want to simply repeat work already done. Instead, he conducts an efficiency cum performance audit. He asks critical questions. Were the objectives of the PSU met? Was there value for money spent? Were the targets achieved? By reviewing management decisions and conducting a comprehensive appraisal, the C&AG identifies specific areas of weakness within the organization.
To summarize this section, remember that the C&AG's approach is a holistic blend of financial, compliance, and performance auditing to ensure total accountability in the public sector.
Now, let's dive into the core objectives and elements of auditing public sector undertakings. This is a crucial area for your exams, so let's break it down simply. First, let's look at how an auditor examines the decisions made by management. It's not just about whether a decision was made, but whether it was made by the competent authority. As an auditor, you need to verify that the management considered all relevant aspects: economic, technological, and public interest using all available information at that time. You are essentially checking if they weighed different alternatives and ensured the decision aligned with the overall aims and objectives of the enterprise.
Next, we have a very important perspective: the audit as a tool for helping the government. While we often think of auditing as a way to ensure accountability in the public sector, it's equally about improvement. By identifying financial and operational deficiencies, system inadequacies, or performance shortfalls, the auditor helps the government and management increase their efficiency and effectiveness. This is why there is an increasing emphasis on audit being an instrument of improvement, linking financial performance directly to physical performance and the economic management of resources.
Now, this brings us to the concept of accountability, which is split into 2 main elements. First, there is fiscal accountability. This is your traditional audit looking at the provision of funds, sanctions, compliance, and propriety. Then we have managerial accountability. This is where we talk about efficiency, economy, and effectiveness. You'll often see this referred to as an efficiency cum performance audit. Think of this as an objective examination of an organization's performance, specifically designed to find opportunities to do things better, cheaper, and more effectively.
To wrap up this section, let's look at the broader elements of PSU audits. The primary goal here is to augment the confidence of the intended users. We do this by providing independent and objective assessments and highlighting any deviations from the accepted standards or principles of good governance. Keep these concepts of fiscal and managerial accountability clear in your mind, as they form the foundation for everything else we will study regarding public sector undertakings.
All right, let's dive into the overview of audit of public sector undertakings, or PSUs. When we look at the audit of any PSU, there are three basic elements we need to understand: the three parties involved, the subject matter components, and the types of engagements.
First, let's talk about the three parties. Every audit involves an auditor, a responsible party, and intended users. The auditor in the context of PSUs is the Supreme Audit Institution of India, known as SAI India. This is essentially the Comptroller and Auditor General of India, or the CNAG, along with the Indian Audit and Accounts Department. If you see senior functionaries representing the CNAG at the state level, they are referred to as Accountants General. Next, we have the responsible party. These are the people or entities whose responsibilities are set by constitutional or legislative arrangements. Usually, this means the auditable entity itself or those charged with governance. Finally, the intended users are simply the individuals or organizations for whom the auditor is preparing the report.
Now, let's move to the second element, the subject matter, criteria, and subject matter information. Think of this as the what and how of the audit. The subject matter is the actual information, condition, or activity being measured. The criteria are the benchmarks or the yardsticks used to evaluate that subject matter. And the subject matter information is the final outcome, or the result of measuring that subject matter against those criteria.
Lastly, we have the types of engagement. There are two main types here: attestation engagements and direct reporting engagements. In an attestation engagement, the responsible party is the one who measures the subject matter against the criteria and presents the information. The auditor then steps in to gather evidence and provide a conclusion based on that presentation. On the other hand, in a direct reporting engagement, the auditor takes the lead. It is the auditor themselves who measures or evaluates the subject matter against the criteria. Look ahead, think of it this way. In an attestation engagement, the responsible party, which is usually the management, does the heavy lifting first. In a direct reporting engagement, to perform the evaluation yourself. This is typically how performance audits and compliance audits are handled.
All right, let's dive into the types of engagements and the fundamental principles governing PSU audits. This is a crucial area for your exams, so let's break it down simply. First, we need to distinguish between attestation engagements and direct reporting engagements.
Think of it this way. In an attestation engagement, the responsible party, which is usually the management, does the heavy lifting first. They measure the subject matter against a specific set of criteria and present that information to you. Your role as the auditor is to gather evidence and provide a conclusion on whether their presentation is accurate. A perfect example of this is a financial audit. The company prepares the financial statements, and you attest to them.
On the other hand, in a direct reporting engagement, the auditor takes the lead. You, the auditor, are the one who actually measures or evaluates the subject matter against the criteria. You don't just check someone else's work, you perform the evaluation yourself. This is typically how performance audits and compliance audits are handled.
Now, moving on to the principles of PSU audits. These are the general standards that the personnel of SAI India must follow. They are the bedrock of how any PSU audit is conducted. These principles are neatly divided into two groups.
The first group is the general principles. These are the overarching professional standards that apply regardless of the specific type of audit. They include ethics and independence, which ensure the auditor remains unbiased. Then we have professional judgment, due care, and skepticism basically, keeping a questioning mind and applying your expertise. We also have quality control to ensure the work meets high standards, and audit team management and skill to ensure the right people are doing the right jobs.
Finally, we cover the technical pillars: audit risk, materiality, documentation, and communication. The second group focuses specifically on the audit process, which we will explore in more detail as we move forward.
First, let's talk about the financial audit. Now, remember, the primary goal here is twofold. First, the auditor needs to express a formal audit opinion on the financial statements. Second, by doing this, we are enhancing the confidence of the intended users like the government and the public in those financial statements. The Comptroller and Auditor General, or the C&AG, is the key authority here. The C&AG will express an opinion on whether the financial statements are prepared, in all material respects, according to the applicable financial reporting framework. If the framework used is a fair presentation framework, the C&AG specifically checks if the statements are presented fairly or give a true and fair view in accordance with that framework.
Moving on to the compliance audit. Think of this as an independent assessment. We are checking if a specific subject matter is in compliance with the applicable criteria. In simpler terms, the auditor assesses whether the activities, the financial transactions, and the information provided by the PSU comply, in all material respects, with the regulatory rules and other laws that govern that entity.
Now, to put this into practice, the material outlines a very logical flow for the audit process, which you should memorize as a sequence. It starts with planning the audit. This is where you establish the terms of the audit, obtain a deep understanding of the entity, conduct a risk assessment or problem analysis, identify any risks of fraud, and finally, develop a detailed audit plan. Once the plan is ready, we move to conducting the audit. Here, you actually perform the planned procedures to gather audit evidence. Once you have that evidence, you evaluate it and draw your conclusions. Finally, we reach reporting and follow-up. You prepare a formal report based on the conclusions you've reached, and then you follow up on those reported matters to ensure that the necessary corrective actions are taken.
All right, let's dive into the concept of compliance auditing. Now, when we talk about compliance auditing, we are essentially looking at two main pillars: regularity and propriety.
First, let's break down regularity. This is the more straightforward part. It's all about adherence. We are checking if the subject matter follows the formal criteria set out by relevant laws, regulations, and agreements that apply to the entity. In simple terms, did they follow the rules on the books?
Then we have propriety. This goes a step deeper than just following the law. Propriety is about the observance of general principles governing sound financial management and the ethical conduct of public officials. While regularity is the core of compliance auditing, propriety is absolutely critical in the public sector. Why? Because there are higher expectations when it comes to how public money is managed and how officials conduct themselves. It's not just about whether it was legal, but whether it was proper and ethical.
Now, let's look at the perspective of how these audits are actually conducted. Compliance auditing isn't always a standalone event. It's often part of a combined audit approach. You'll generally see it happening in one of three ways. First, it can be conducted in relation to the audit of financial statements. Second, it can be carried out separately as an individual compliance audit. And third, it can be done in combination with performance auditing.
This third point is very important. When compliance auditing is integrated into a performance audit, we view compliance as one of the key aspects of economy, efficiency, and effectiveness. In these cases, non-compliance isn't just a rule-breaking event. It could be the cause of a problem, the explanation for why something went wrong, or even a consequence of the state of the activities being audited.
Now, let's dive into the overview of the audit of public sector undertakings, specifically focusing on the compliance audit process. This process is guided by the compliance and auditing guidelines issued by the C&AG of India, and it follows a very structured, logical flow to ensure that public funds are used according to the law.
First, the process begins with a strong foundation. The auditor must consider principles with ethical significance and those directly relating to the compliance audit process itself. Once the ethical framework is set, the focus shifts to the structural setup, determining the auditable entities, the specific audit units, and the implementing units.
From there, we move into the planning phase. This starts with developing an annual plan for compliance audits, followed by determining the specific objective and scope of the audit. To make this operational, the auditor develops a detailed audit strategy and plan, identifies the subject matter and the criteria against which the entity will be measured, and gains a deep understanding of the entity, its environment, and its internal controls.
As we refine the plan, the auditor establishes materiality for planning purposes and assesses the risks involved. This allows them to plan the specific audit procedures needed to gather evidence. It's important to remember that this isn't a one-time event. The auditor must continually update the planning and risk assessment as the audit progresses.
During the execution phase, while gathering evidence, the auditor must be vigilant for any non-compliance that might indicate suspected unlawful acts. Once the evidence is collected, the auditor evaluates whether it is sufficient and appropriate, considers materiality for reporting purposes, and finally forms their conclusions.
The final stage is all about communication and accountability. This involves ongoing documentation, communication, and quality control. The auditor then prepares the formal report, ensuring that responses from the entity are included where appropriate, and follows up on previous reports to ensure that past recommendations were implemented.
To summarize, this entire journey can be broken down into 6 key pillars: the general principles and annual plan, planning the audits, performing the audit and gathering evidence, evaluating evidence and forming conclusions, reporting, and finally, documentation. Communication, and quality control. Keep these steps in mind, as they form the backbone of how compliance is ensured in the public sector